All right, let's get right into it here. We're looking at Spider 65-minute chart here. As you can see, we did witness a little bit of pop on the last hour. As you can see, what happened was, though, with that pop is that we obviously did make that higher high here in the micro term. And with that move, it seemed as though bulls were trying really hard to reprogram that micro-term moving average in the last 4 hours or so. As you can see, because that micro-term moving average, you see that squiggly aqua color line there, that mid-term moving average, once it was lost right here last week, right there, as you can see, this is a point where we lost that micro-term moving average. As you can see, ever since we lost that micro-term moving average to the downside right here, things got extremely hectic for days. You can see how bulls trying to get up every hour. You see these little pops here and there. Even on this day, look at that long upper wick here. So there are so many attempts to trying to get above the micro-term moving average and not able to reclaim that, and bulls failed that miserably. And with that, obviously, we did witness this market continuing to cultivate the lower highs and lower lows here and staying underneath the micro term. Again, that aqua squiggly line, right? This is why I think last several hours, bulls were trying extremely hard just so they can possibly get above the micro term, and looks like on the last hour we did that. And obviously, once we thrusted above the micro term, and there's a short-term moving average waiting there, right? That's not a coincidence or mistake or random occurrence that when we did see that pop, as you can see with that upper wick, the market is definitely aware of the short-term moving average, because when we did lose that micro-term moving average, we actually lost the short-term moving average first right here. As you can see, ever since the short-term moving average was lost, again, the micro-term and the short-term, they're working together, supporting the sellers. So now that the buyers have seemingly at this hour, at close today, possibly fully successfully reprogrammed the micro-term moving average, now they have to deal with the short-term moving average, and that's the last hour there. This is a level where the market initially made that lower low, right? So you can see it made a move for about 2-3 days or so, and then subsequently we came back down, made lower low. And the reason why that's important is because a lot of people who went long anywhere in this vicinity, they're going to place their stops just underneath this low. So those stops were getting taken out, and market is really good at that. Market is really good at it, and they mastered this craft. You know what I'm saying? Like there's like smelling this these stops, right? That you're trying to hide, right? And then market is really good at sniffing that out and taking your stops out and then going up without you. So just keep that in mind. That's why these levels are very psychological, because why didn't market just bounce at support, right? Why wouldn't it find support at support just to make everybody's life easier? So we all know that that's a support. Obviously, more often than not, I talked about this many times before, that market isn't gonna find support at obvious level. What it wants to do is that if everybody's looking at a certain level, it's gonna break below it, just to create panic and take your stops out, and then it's going to do a little pop, and that's exactly what happened today. So now the short-term moving average is getting retested tomorrow. Going into tomorrow, if we do see a follow-through to the upside, let's just say, because it looks like we do have about 2 days of upturn here, and with that move, we're back above the micro-term moving average. And last time when we did get above the micro-term, we did see at least one more day or so. I mean, it wasn't smooth or anything like that, but at least we did see some uptick. for a day or two, right? So that sort of looks like, you know, that's what we saw here. We're above the microterm. So if we do see move to the upside, there's a midterm moving average, right? So if I zoom out, you'll see why the midterm moving average does carry an impressive resume. So as you can see, the midterm moving average, I mean, this midterm moving average, you can see it was acting as support right here. Once it was lost right there, creating havoc. I mean, look at this thing. This thing just never able to recover, ever. I mean, even, so we had about a couple touches there. So you can see we lost the midterm right here. The midterm, right, act as resistance there. You can see on that pop last week, that was that midterm, you know, doubling up or teaming up rather with that down gap. You see the down gap wasn't fully filled. That down gap still open. So down gap is there. The midterm was there. I'm talking about this level right here, right? The midterm is there, the midterm moving average, and the down gap is there, acting as a, we actually gapped up. So that was a pretty strong bounce on that one, on that first hour, because it was a up gap, but then midterm creating havoc once again, slaughtering the bulls, and you see how quickly things turned out. So now bulls might want to battle with that midterm moving average once again tomorrow. Looking at the oscillator here, we do have for the first time in a while now, we do have what it looks like a bullish divergence here. The bottom oscillator does have a more pertinent, more potent bullish divergence. That's you know, and very definitive higher low, right? It's nothing ambiguous about this. That's the low. That's an higher low, right? So that's very definitive higher low. Price action, we do have definitive. That's low. We got the lower low, right? So I've added that oscillator just kind of keep track of this bullish divergence. I mean, we do have a slight bullish divergence on my main oscillator. You see this. You know, me analyzing this oscillator quite a lot. I'd like to tweet things. I like to look at this oscillator, but we do have a slight bullish divergence, but not as pronounced as what we're seeing on the bottom oscillator here. So obviously, this is important because bulls need all the help they can get, especially they've been in this downtrend. Bulls been really beaten down for weeks now. So we're just right on the short term. Looks like we're going to retest a midterm moving average as long as no shenanigans down move tomorrow, because you can see both of the oscillators are favoring the buyers going into tomorrow. So the only question is how this market is going to deal with this bear troop that's been creating a havoc for the bulls in the last couple weeks.